Hey everyone, welcome back to the channel. Quick question. When you tap pay with UPI on your phone, do you know what's actually happening behind the scenes? And is UPI the same thing as a digital payment or something different? Today we are breaking down digital payments versus UPI. What what each one actually means, how they compare their pros and cons, and why UPI has basically taken over India pays. Let's get into it. First, let's define our terms digital payment. Digital payment is an umbrella term. It covers any payment made electronically without physical cash changing hands. That includes debit and credit cards, net banking, mobile wallets like Paytm or Amazon Pay, NEFT, RTGS, bank transfer, and yes, UPI too. The key thing to remember, digital payments can be instant, like a wallet payment, or they can take hours, even a full working day, like an NEFT transfer. And depending on the method, you might be going through a card network, a payment gateway, or a clearinghouse before the money actually lands. What is UPI? Now UPI, the Unified Payments Interface, this is a specific system built in India run by NPCI, the National Payments Corporation of India. It launched back in 2016, and what makes it special is that it links your bank account directly to a virtual payment address. For example, your name at the rate bank. That means UPI payments are always instant, bank to bank, 24 hours a day, 7 days a week, even on holidays. Here's the part people love. One UPI app, one login, one control, multiple bank accounts. So UPI isn't a rival to digital payments. Think of it as the fastest, most streamlined member of that digital payments family. So let's put them side by side. One feature speed, general digital payments vary. Some instant, some take a day or two. UPI always instant. On cost, many digital payment methods are free, but cards and wallets can carry MDR or convenience fees. UPI is free for individuals on person to person and most merchant payments. On what you need, a card, a wallet, balance or net banking login. For general digital payments. For UPI, literally just your bank account, your phone number and a UPI PIN. Let's understand the benefits and drawbacks. The pros and cons, like digital payments overall give you convenience, a traceable record for every money spent, and they are accepted almost everywhere. Cons, fees on some channels, fraud risk and wallets that don't talk to each other. UPI specifically is instant, free, works across all your banks from one app, and merchant acceptance now runs from your local vegetable vendor to national retail chains. But it's not perfect. There are per transaction limits, usually around 1 to 2 lakhs rupees. It needs a live internet connection, and if you send money to the wrong ID, reversing it is generally hard. The Indian numbers. Let me talk on stats now. Now here's why this actually matters at a national scale. In financial year 2025-26, UPI processed around 24,162 crore transactions. That's up 30% year on year. UPI now accounts for roughly 85% of India's entire retail digital payment volume, and globally, nearly 1 in every 2 real-time payments on earth runs through UPI. We have gone from just 44 banks live on UPI in its first year to over 700 banks today. And if you look at the monthly trend through 2026, UPI actually crossed 23 billion transactions in a single month. For the first time in May, that's the scale we are talking about. So, for a bottom line, if you are making an international purchase, a big ticket EMI purchase, or you want card specific rewards, reach for a card or another digital payment method. But for everyday stuff, splitting a bill, paying a shopkeeper, sending money to a friend, UPI is faster, cheaper, and honestly just easier. And the line between them is only going to blur further with things like RuPay credit cards on UPI going cross border to more countries. If this helped clear things up, hit like, subscribe for more finance breakdowns, and drop a comment. Which one do you see more, cards or use UPI? See you in the next video. Thank you.